Electrosteel Castings expecting a boost from capacity expansion. DI pipe and DI fittings form about 90% of company's revenue, well-known name in water supply and sewage applications. The company enjoys first mover advantage in the domestic market. Its other products include cast iron pipes, sponge iron, ferrosilicon and pig iron. A well-integrated company, both backward and forward. In-house capacity for pig iron, sponge iron and coke is to its advantage. Has a strong domestic network. A quarter of its revenue comes from exports to US, Europe, South America, Middle East and North Africa. Commands a premium for its quality and delivery. Consistent flowback into capital expenditure, sizable. Dividend is nominal, but the payout is about 11% with a yield of 1.7%. Making use of operating leverage and very efficient working capital management, able to generate exceptional surplus. Nominal dividend has enabled equity to grow at a higher rate. With the total assets, equity compares quite fairly, contributing almost to 60% as per the September 2024 figures. The trajectory of equity in total assets has been rising. As a result, it is almost a debt-free company with the debt at about 6% of equity. The utilization of current capacity of 8 lakh tons per annum has been near 100%, and the company is going for adding 1 lakh ton each in FY25 and FY26, and this addition to capacity is likely to benefit the company quite a lot in catering to the market. Company has a competitive edge by being a pioneer in the field, and it is also assisted by a strong moat in terms of entry barriers like huge capital outlay and critical accreditations which are required for any entrant. Beside its operational strength, the share price of the company has crashed almost 60% from its peak, and as a result, the current price earning multiple has moved almost closer to the level 2 years ago, and that makes the company's shares quite attractive in comparison with its peers. Historically, the quarterly contribution towards revenue has remained almost uniform, contributing about 25% each quarter. Adding to the strong order book, the company expects to have a revenue of almost 27% going by the precedents and have FY25 with normal growth rates in revenue. The quarterly revenue figures of the company posed a concern when it came to the recent 2 quarters. Q2 grew negatively year on year, and a similar negative growth was found in Q3. Although Q3 had shutdown for maintenance of mini blast furnace, the overall sales increase for the first 9 months of the year painted a dismal picture with a growth rate of meager 2.6%, and margin on the contrary could not even register the growth of the revenue and posted just 1% growth on the basis of additional expenses incurred during the period. That is a matter of concern. The company had a planned shutdown of its mini blast furnace for 14 days spread between Q3 and Q4, and the company has estimated the shutdown expenses to be around 7.5 crores and a revenue loss of almost 100 crores between Q3 and Q4, of which 45 crores has already been accounted in Q3. Continuously moving upwards from May 23 and reaching a peak in September, what followed subsequently has been a continuous fall, taking the share below all averages into the bearish zone. While the fundamentals of the stock are good, signs of recovery are not visible as yet. Price action data for the last 6 months is confirming divergence between price and quantity during the period, suggesting support to price fall, which has been quite evident for most of November, December and January. And recently the quantity is showing an upward movement with a very fall, suggesting the bearishness persists. The strong shareholding pattern of the company, with a promoter holding close to 50% and a consistent holding of FPIs at almost 20%, gives a worry from the angle of indifference from both DIIs and mutual funds, and that is a serious concern. Hope you found this video on Electrosteel Castings to your liking. I am Vitthal Prabhu with the fortnightly video on Stock Learning Simplified. You can access videos with similar quality content at our info card, and we look forward to your valuable feedback for improvement. If you are new to the channel, may kindly subscribe and press the bell icon for intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.